Okay, so here's the technical analysis on the SIRI trade. This is one that we scored a couple of $1,000 on in through here, and another 1,500 in through here. This isn't rocket science. One of the easiest trades out there. Since I've been at PennyStockLive, now Jason Bond picks, I've talked about getting SIRI in the 150 to 160 range, and I certainly wasn't going to miss these opportunities. This is just, a jackpot score. You could probably let it run long term and make a lot more money, but that's just not my style. Let's look at a 1-year chart here and identify support. Look at that. Look how strong that support is right in through there. Okay, so we're talking about massive support in the 160, to 166 range. Anywhere in through here is going to be in an area where institutional buyers and retail traders like us are going to pick up shares. That type of support is going to cause the stock to bounce from there when good news comes back into the market or into the stock. So you have direct and indirect, catalysts that can affect SIRI. Now this is a huge market cap, so it's not going to move quickly, but it also isn't going to fall apart on you quickly. So as long as you're watching your trade on a minute by minute or hour by hour basis, or of course if you have me to do that for you, it's going to be hard to lose big on SIRI. I'm not saying that you can't lose $1,000, $2,000, but the stock's just not going to fall apart on you, and it's certainly not going to fall through this level very easily. So it's just a matter of getting the right entry. And the first time I traded it, got it in through here, had a real nice score, close to $2,000. I'm going to make this a short-term 100-day chart. The second time I grabbed it was yesterday, Tuesday, at 162. Now, I grabbed it at 162 and it ran on me, and I was ticked because I only got 10,000 shares. Put it out on an alert, and it was, moving up intraday. It dipped back down further into the low, actually getting down into the 159 range. Best case scenario, you were either on the bid at 159 or you were buying 160. And we'll look at, the 1-day chart to see that. Let's go 1 minute, 3-day, and you can see that dip. Okay, so I grabbed 162 yesterday right here because that's support. I mean, when a stock gets down there, it's almost a gimme. It's just free money in my opinion. And the reason I say that is, it certainly you could lose on it, but your stop loss is so tight. I mean, you set that stop loss at 155. You're watching, you do a mental stop at 155, you're talking about 7 cents a share, a couple $1,000 loss for an upside of 20, 30, 40 cents a share. I mean, the risk reward ratio there is excellent. And you can see, it worked back up, and at 169, I was in at 162, I was already up 7 cents a share. And, with 10,000 shares, that's an easy $700. I was pissed that I didn't pick up more shares. So when it dipped back down, I wasn't going to miss this opportunity twice. As soon as it got in this range, I picked up another 10,000 shares at 162. In hindsight, I wish I would have picked up 40,000 shares, 2 blocks of 20,000 apiece. But, it just didn't work out that way. So we'll go back to the daily chart. And you can see that the market was green today, and it bounced quite nicely, and that's just an easy score. I took it at 170 because I didn't think it was going to break. I was having a hard time getting above that 170 level, and sure enough, right after I sold right in through here, you can see the big institutional buying in through here. That's when the market turned up and it just fired. And I left, God, I want to say about $2,000 on the table between 171 and the high of 178. But you're not gonna get that range perfect every single time. The overall idea of this video is to simply identify support, buy at support, sell at resistance, or sell when you're happy with your profit. For me, $1,000 and $2,000 is always going to be a good profit. But this is a no-brainer. You can just see the absolute good resistance here. Good support here on the stock. You have a high here that acts as resistance. It dips down, it breaks it. So now this becomes support for the stock. Stock dips down and it holds this level. So this resistance, when broken here, becomes support here. The stock works back off of it. Now this resistance here, when broken, becomes support here. So it's just a pattern of making higher lows. All right, you've got a high, you got a low, you've got a higher high, and a higher low, another higher high, and another higher low. You get that pattern. It's just a real strong support indicator, and you just work off of that. Now the market took SIRI down like it did a number of stocks, and if you look at the SPY, this is going to resemble, look at this chart and look at the SPY. Look at how closely they look, it's almost identical. There's the SPY and there's SIRI. Okay, look at this little loop here. Look at this drop and the little loop. Now look at the SPY. So the stock is down simply because the market is down. So when the market is recovering, and if you can find good support, you're just going to put cash into your pocket. It's not that easy. I mean, obviously you can lose, but this is twice now. I've put about $4,000 in my pocket on SIRI just by buying at support and selling for a profit. I mean, from here to here with 20,000 shares, you're talking about an easy $10,000 score depending on how much money you put into the stock. And I was able to take about $1,500 out of it today simply by buying at 162 yesterday and selling at 170 today. It's that easy. So understand your technical analysis. Read these video charts, read books about technical analysis, get to know how stocks trade, understand how the market works. Of course, if today was a very bearish day, then SIRI wouldn't have been as easy of a trade. We would have cut it for probably $200 to $300 profit. But we had a back-to-back green market, and that's how it works. But knowing where the support is gives you the entry to be able to take a very, very tight stop loss if it dips down below these levels. That's how we played it. So hopefully this will help you out in the future. Hopefully this will help you understand that when I send an alert through text message and email, it's for a very, very strong reason. Both of my trades, look at them on Profitly. They were both purchased at 162. I'm not buying anything, that I'm not super comfortable with, and I'm not putting my money at risk whenever possible. And this, to my opinion, is a very safe trade if there is such a thing. All right, take it easy, everybody.